Hello, everybody. This is Alan Ellman, the Blue Collar Investor, welcoming you to another one of our sample trade videos. This one is a real life example with Vertiv Holdings Company listed on the New York Stock Exchange under the ticker symbol VRT. Um, it's a two contract, 5 day defensive, high implied volatility, low delta cash secured put trade. Boy, that's a mouthful. Now, I initiated this trade this past Monday, October 6th, 2025, and it expired yesterday, October 10th, 2025. Today is Saturday, October 11th, 2025. And by the way, I'll allude to this a little bit later on, but yesterday was quite a day in a negative way for the stock market. All right. So why did I choose Vertiv, VRT? Well, when I decided to do something a little different for this trade, I decided to go through last week's weekly stock screen and watch list and look for the security that had the highest implied volatility. Then I went to the option chain to see if I could find a strike price with a very low delta, a very low risk of exercise. And then I went to the calculator to see if I could make some money. All right. So this was kind of an experiment, but I knew that I would be successful in finding that I can do this. And that's what I want to show you in this video. So why did I choose Vertiv to begin with? Well, I highlighted for you in this yellow row in the screenshot Vertiv. And again, this is a small snippet of our 9-day, 9-page rather, weekly stock screen and watch list that we provide to our premium members every weekend. Matter of fact, my team is working on it right now as I'm creating this video. Okay, so you could see here that VRT was on the IBD 50 rank number 29. That means it's an elite performer from both fundamental sales and earnings growth and technical perspectives, as you'll see in a moment. Now, it's in the machine industry segment, currently ranked A, was ranked A last week as well. And you could see here that the mean analyst rating of 1.59, which is very good because the best is 1, the worst is 5, so that's stellar. Unbalanced volume shows an up arrow, which means more cash flowing in to the stock on up days than on down days, another bullish signal. And then we could see here the technical chart. You could see here I put the stochastic oscillator, you'll see in a minute, as a down arrow. Could have gone either way, but I erred on the side of caution and gave it a bearish rating for the stochastic oscillator. But overall, the technical chart was very, very good. Now, here we go. The implied volatility for the at-the-money strike was 59.1%. That was the highest implied volatility on last week's report. And again, then I wanted to change that high implied volatility stock to a low risk option trade, which I was able to do, as you'll see in a moment. Now, option liquidity was good, and the earnings report and ex-dividend dates were not factors. Here you go. It's been on our list now for 11 consecutive weeks. And these screens in the blue bar at the top are rigorous and very difficult to pass. Vertiv has done so for 11 consecutive weeks. Now, also, let me just go back a slide here. I also want to show you a comparison chart of Vertiv with the S&P. And you could see here that over the last 6 months, Vertiv is up 154%, while the S&P was up almost 35%. And you could see that VRT has been dramatically outperforming the overall market in that time frame. But here's another reason why I wanted to give you this 6-month perspective. Have a look at kind of how flattish the S&P line looks. Very few whipsaws up and down, whereas Vertiv has huge whipsaws. The green arrows show huge up times. The red arrow shows a huge downtime. But in between, we have up, and we have up, and we have up, and then we have down, and we have down over here, down over here, down over here. And so this is like being on a roller coaster ride. And that's what a high implied volatility security chart will look like. And again, the implied volatility being so high accounts for the option premiums being so high, and why we can get a low delta option, low risk option, and still generate meaningful returns. Again, we're not going to hit any grand slam home runs, but we're going to be hitting singles and doubles all day long, as I did with this particular trade. All right, let's go to a more technical chart now. Again, I skipped a slide here. Let's look at the four parameters we use in the BCI methodology. Number one with the red arrows, that's exponential moving averages, identifying trend. And you could see that starting in April over here, you don't have to be Albert Einstein to see the trend has been going up. You also saw that in the chart in the previous slide. Now, the 20-day blue line EMA exponential is above the 100-day red line. That's bullish. And you can see the price bars or candlesticks, whatever your preference, are at or above the 20-day EMA. Bullish. Number one, bullish. Number two, the MACD histogram, which are these blue bars down here, that identifies both trend and momentum. Above zero, a bullish signal ascending where the green arrow ends. Bullish signal number two. Now, number three is where I gave it a mixed review for the stochastic oscillator, which is this black line over here. Now you could see it started ascending, but then dropped below the 80th percentile line, which is this line over here. And then it came above it, but now you could see right at the end, I hope you could see that it's starting to dip down a little bit. So, I mean, technically I can call it bullish, but I'm calling it mixed over here for number three. And then number four for volume, is volume holding up? Are these other indicators meaningful? And the answer is yes, volume is holding up. And so overall, I would call this a mixed chart, but closer to bullish than mixed. All right. So again, that's one of the reasons why I chose this particular security. Now, on Monday, October 6th, I went to the option chain, and the 150 deep out of the money, much, much lower than current market value, 5-day expiration, expiring yesterday, 10/10, that had a bid price of 47 cents a share, $47 a contract. Now, I always tell investors, don't look at the dollar amount. Look at the percent amount and then annualize it to give you a full perspective on how much money you're actually making. Now, the 150 put strike showed a delta of 10%. That means an approximate probability of expiring in the money of 10%. 90% probability that we don't have to touch the trade, that we don't have to do anything. Okay, I like those odds. Now, if it turns out that Vertiv moves from 166 plus to below the 150 strike, and we don't want to take possession of the shares, we can always buy back the option. But that's part of an exit strategy discussion, not appropriate for this particular video. Anyway, risk factor of exercise, 10%. Now, the amount of cash I'm going to generate, and I did generate, was $94 for the two contracts, less about $1 in commission. And so that was my starting point. So out of the money puts, especially deep, deep, deep out of the money puts like this one, offers substantial protection to the downside, but it could still offer significant initial time value returns. Well, how much? Let's put it into the trade management calculator and see. In the top row, you could see that the price of the stock at the time of the trade, 166.21. Deep out of the money, 150 put generated 47 cents, and I'm taking on 200 shares of obligation. It's a 5-day trade, and look at the break-even price point. The stock is trading at 166.21. You won't lose money until it drops below 149.53 in 5 days. Is that possible? Yes, it is. What's the risk? 10% of that happening. Okay. Now the brown cells will show the return. You can see here the return is 0.31% based on a 5-day trade that annualizes out to 22.95%. That gives you a perspective. What if your bank had a 20% CD? Would you be online for it? I would. Now, the purple cell is interesting. That's the amount that the stock can drop to break even, 10.04%. So to lose even a penny, it would have to drop by more than 10.04% in the next 5 days. Okay, what is the risk of that happening? We've already identified that at 10%. All right, now this is a confirmation from my broker that the trade was executed, two contracts at 47 cents a share for the 1010 25 150 put. Okay, that's just the broker screenshot of my broker's confirmation of this trade. Now, again, I collected $94, and the spreadsheet will also show you your entire initial portfolio returns. If it was only these two contracts, you would see a 0.13% portfolio return annualizing out to 22.95%. Once again, just to reiterate, a protection to break even of greater than 10%. Let's summarize now. Significant returns can be generated. Remember, percentages and then annualized can be generated with 5-day defensive cash secured put trades, even when you're using extremely risky, high implied volatility stocks. We can craft these trades to whatever's going on today. Now, one investor's assessment of the market may be different than another's. And you listen to these pundits on TV and you see some of them, real bullish, some of them are very concerned. So you have to make your own decision. Again, mine is I feel we're in an uncertain market, and that's why I've been crafting the majority of my trades in a defensive posture. But again, you could craft it, however you want. You want to be more aggressive, less aggressive, have at it, just as long as you know how to do it. Now, in this particular case with Vertiv, we did get a significant 5-day return, and that status was realized yesterday at 4 p.m. Eastern Time. As I alluded to, I never had to break a sweat with this trade. As a matter of fact, I was checking it to see if I could roll up my put option and generate even more return, but the calculations would just never align for generating greater than that max return. But I did check a couple times. Again, these are low risk trades. They are not no risk trades. And we actually quantified the risk in this particular case at 10%. Folks, that ends another one of our sample trade videos, this one with Vertiv Holdings. A 5-day defensive cash secured put trade, which generated, I feel, significant annualized and 5-day returns. Folks, I hope you enjoyed this video. I thank you very, very much for listening to it. And I hope it eventually puts cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.